Ladies and gentlemen, I've just found an indicator that is flashing code red, and it is showing that there's going to be very bad headwinds coming for the economy. This indicator is something that I've never spoken about before, and something that I don't think many other YouTubers are covering, because I've been watching the markets and how bad things are getting, and I've been thinking to myself, there has to be more going on right now. So I've been researching like crazy, and this is what I found, everyone. US Services Purchases Manager Index PMI crashes to 18-month low as Omicron strikes. And for those who don't know what the PMI index is, it's a Purchasing Managers Index. And this index can give us a look into the future to see how the economy is going with manufacturing and the services sector. The PMI index is a monthly survey of supply chain managers across 19 different industries. And in the index, there's a value from 0 to 100. And if it's over 50, then that means things are expanding. But if it's at 50 or falls below, then that means activity is contracting. The value and movements in the PMI and its components can provide useful insights into business decision makers, market analysts, and investors, and is a leading indicator of overall economic activity in the US. So everyone, I can't stress enough about how much this index can tell us how strong the economy really is. With the US macro data serially disappointing in recent weeks, it should come as no surprise that analysts expected both services and manufacturing surveys for market to slide further in the preliminary January data. The analysts were right in direction, but the magnitude was dramatically worse, with manufacturing dropping from 57.7 to 55, worse than the expected 56.8, while services collapsed from 57.6 to 50.9, hugely worse than the 55 expected. And I bring up a chart here just so you can see here, look in this red box here, we can see activity is rapidly declining. And just to put it into perspective, that is the lowest services print since July 2020. And what was happening in July 2020, everyone? The economy was collapsing. And the lowest manufacturing since October 2020, which combined dragged down the US composite PMI down to July 2020 lows. Now second only to Japan for the weakest economy in the developed world. But let me break down what this really means for you in simple terms. What this means is the current outbreak of the pandemic, the supply chain issues, they're not getting better, they're getting worse. We're seeing with the US initial jobless claims, unemployment claims are starting to go up. And with staff shortages, wages going up, and companies not being able to get supplies, this is going to hurt revenue growth for US listed companies on the New York Stock Exchange. Now you may think this is boring macroeconomic data, but look how correlated the PMI index is to the S&P 500. Look at this chart here, everyone. The dark blue line is the S&P 500 and the light blue line is the PMI index. And as we can see here, since 2012, as it's been going up, the stock market goes up. But when it goes down, the stock market goes down. We can see here it is very highly correlated. And I think this is just one of the many pieces of the puzzle that spooked the markets yesterday. Because why all eyes are on the Fed today and tomorrow with the Federal Reserve meeting, it's not just the Fed, everyone. The economy is weakening, costs are going up for businesses, and revenue is going down. Also, valuations are at crazy levels, so this is the correction the market needed. So everyone, this is just another piece of economic data that I'm going to be monitoring, and I'll keep you updated with what happens with this data. Now, for my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you in the next video.